Hey everyone, Coach Investor back to another video for today and back with probably the most controversial investment case in the last couple of years. I'm saying controversial because on the one side, if this were an American company, the stock price would be probably 2 to 3 to maybe even 4 times higher than it is today. Why is that? Because it is a good business. It is a very, very good business. It has been growing for years and years. Yes, we had that slowdown for a short period of time because of the lockdowns, because of the crackdown on tech when it comes to China. Now we are becoming a bit more profitable. Free cash flow is increasing as well. Share buybacks are increasing as well. And yet the stock price has not moved. Actually, it has been performing very, very badly. On the flip side, which is the negative side, it's a Chinese company. It can be destroyed by the CCP in one day or another. Of course, it would be a disadvantage for the Chinese economy to destroy a company like Alibaba. But hey, there is always geopolitical risk, there's CCP risk. So it's really a weird case right now. So let's have a look at the current state of Alibaba. Let's have a look at what has been happening around that company. Now, I will say this, just because it is a Chinese company, just because we as investors perceive this as a very, very bad investment, does not mean that the products that they're offering, the services that they're offering are bad. Actually, if these stats here are of any help to us, this is from SimilarWeb, so they say here the top 8 UK e-commerce brands by percent of traffic coming from apps. You can see number 1, Alibaba, 90%. And then number 8, which is also owned by Alibaba, it's AliExpress, 65%. Now, I'll go even further. Which other Chinese companies, which other Chinese apps have become extremely popular in the West? TikTok, for one. Of course, there is that data risk. Temu from Pinduoduo, which also has some data risks as well. And a lot of people aren't really familiar with it, but DJI, the drones, the action camera, it is a Chinese company, and yet it's one of the most popular choices when you go for action cameras and drones. So for those that are saying, oh, I'm never going to help the CCP, the Chinese company, blah, 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 you might actually own a lot of Chinese-made apps and a lot of Chinese-made products, of course, made in China. I mean, we don't really have much choice these days, but just an FYI. So let's have a look at the current state of the company. Market cap of $217.56 billion, forward PE of just 9.6 times. Pretty incredible. Year to date, it's down 2.8%. Now you can clearly see here, buybacks have started back in 2021. Of course, with China being China, they are not really willing to, reward Western investors. So there is a limit to how many shares they can buy back. They've got plenty of cash to buy back way more shares than they're doing right now. If you look at free cash flow over the last couple of years, it has been going up. Of course, we had that dip in 2022. It was a bad year. The competition was coming. Other companies, JD, Pinduoduo, were growing faster than Alibaba. They had some internal issues as well. But as you can see right now, the growth rates are back up. The expectations EPS for the next 5 years is now just under 25% growth. So pretty good. And then, of course, if you look at the PE, EV to EBITDA, price to sales, price to free cash flow now in the next 12 months compared to its mean in the last 9 years, I mean, we are now in a state where the company is just super, super, super cheap. But of course, the market does not like one thing, and that's uncertainty. Right now, there is a lot of uncertainty when it comes to China, when it comes to the region next to China as well. Of course, 2024 presidential elections in the United States, a lot of things can change, whoever takes that seat in the White House. But purely looking at the stock's valuation here, it is extremely cheap. Now, if you enjoyed this type of video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're very close to reach 30,000 subscribers, so really thank you very much to everyone that has been supporting the channel, whether it's through subscribing or becoming a member. And thank you very much to the newest member of this channel. I really appreciate it. You don't really have to, but it's very much appreciated. And if you want to support me even further, do check out the link down in the description and end up in comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, continuing here on the bullish case for Alibaba, it's obviously their latest earnings report. Well, it was already a couple of months ago. You can see revenue were growing it at 14%. Now, if you look at each and every segment here, I mean, we're growing double digits and sometimes 40, 30% here. Yes, the big, I wouldn't call it a red flag, but let's call it a Bordeaux flag here, which is the Cloud Intelligence Group that has only grown 4%. But all the rest, Taobao Tmall, 12%, Alibaba International Digital Commerce Group, 41%. Of course, the growth rates here look incredible, but that's because the year before, growth rates were not that great. Now, when it comes to the uncertainty, especially when it comes to the cloud business, we had that announcement coming out of nowhere. Suddenly, there is a transition in leadership, so Mr. Joseph C. Tsai will assume the role of chairman and Mr. Eddie Yongming will assume the role of chief executive officer or CEO and director of the company. In addition, the company announces that Mr. Wu will succeed Daniel Yong Zhang as acting chairman and CEO of the Alibaba Cloud Intelligence Group with effect from September 10. Now, of course, we know that there are going to be a couple of spin-offs from Alibaba's business, cloud being one of those. So maybe they felt that they needed to make that change, or maybe this is another type of Jack Ma scenario. We don't know. Now, going back to the earnings number and going back to my case of we're becoming more and more profitable, you can see this right here, total segment adjusted EBITDA and consolidated one. You can see 32% growth year over year. All segments are improving quite nicely. Of course, some of them are still unprofitable, but are becoming more profitable over time. Now, if you look at the Cloud Intelligence Group, that has increased 106% year over year, still a small number though. Now, of course, with increased profitability, you have free cash flow that has increased as well, and so they can buy back more shares if their shares keep on being this cheap. Now, what other ways are there to increase shareholder value? Well, spin-off of a couple of their business segments. So we had that announcement of the proposed spin-off and separate listing of Cainiao Smart Logistics Network Limited on the main board of the Stock Exchange of Hong Kong Limited. By the way, if you want to invest in Alibaba, I highly suggest to look for the option to buy the shares on the Hong Kong Exchange, a bit less risk. So apparently they're filing for a $1 billion IPO, helping Hong Kong to land the world's second biggest listing of 2023 after the SoftBank-owned ARM listing. And before we look at the graph, one thing I want to show you, this is a great picture that was in a big post on X by Wealthy Readings. I highly suggest you go follow that account. So here you can see China's import and export. What is very clear here is that China has a nice little surplus here when it comes to trade, $857 billion. So yes, although China at the start of this century was pretty much nobody, the West has helped it to build up this empire. And now, while they are in a surplus, a lot of Western countries are in a trade deficit, including the United States currently, that will probably change over time. Now, looking at the graph, again, it's been a roller coaster ride with highs, we've had lows. Then since May 2022, I made a video, could we go back to $100? We did reach the $100, but we didn't really stay there for that long. Then we went down around 14 to 15% until we reached the price it is today, $85 to $87 or so. RSI neutral, MACD is still bearish. Again, this investment case is going to be one for the history books. How can a company that is so valuable trade at such, I would say, junk prices? Well, some might say that politics have probably ruined one of the best investment ideas in recent years. Of course, things can change. It could be that by the end of next year, I don't know who's going to be president, things will change, relations with China will become better, relations China, one China, Taiwan, etc., will become clearer. The market will then switch from, oh, we are now in uncertain times, we are going into less uncertain times, and suddenly this stock doubles or even more in the next 5 to 10 years. Could very well be. Remains to be seen what happens. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.